Hi, folks. It's Ada and CryptoBurb speaking. It's Friday. Welcome to today's Friday webinar. Bitcoin has retraced 20% off the local peak from around $25,000 dip towards or even slightly below $20,000, right? So many people already start panicking and, well, forgetting that there was a 65% rally right before it happened for Bitcoin to collapse a little bit, right? And just like many times in the history, Bitcoin likes to show that it's a volatile asset, that it's a risky asset. However, it does win a lot to those who remain patient. We are going to discuss the market crash and what the potential conclusions and consequences are for the next couple of days. If you're ready to hear this and more, make sure to stay tuned. We are going there right in a second. Welcome. It's Ada and Crypto. Again, welcome to today's Friday webinar. And well, it's really surprising how fast the tables turn on the emotional side, right? Many people are apparently falling for some sort of like an emotional roller coaster. Twitter has been extremely toxic today. It's incredible. The same people who would, literally cheer you up on the next day whenever there's a red day, they would slice you up in half and cut your throat. It's really an interesting playground and a social experiment to observe. However, nevertheless, I want to welcome everybody watching this show. I'm really happy and excited. You can see a lot of my smile, a lot of smile on my face, right? Because when I see people like Robert joining in, thanking for the timely info. When I see Stephen Seedhouse joining us from beautiful Wales, this is really incredible, right? I'm really blessed to be doing this for you guys. I really appreciate your tuning in, and more importantly, more so, I really want to deliver some sort of like a valuable content that may help you just ease the decision making process. Help you make better decisions, but more informed, better time decisions for the investments, right? I think that starting off by understanding that markets are volatile and they never move in one straight line up or down. And it was the very nature of it, right? We as traders, we have to suffer and undergo many different corrections on the way up, right? And I brought earlier today also in the Twitter, just a little bit of a short thought. Maybe it will open eyes to some of the people, some of the traders, forgetting that Bitcoin did decline also 20% from 4,200, from $4,000 down to nearly $3,000 in February, 3 years ago, or even 4 years ago. Jesus, time flies fast. 4 years ago, right? I remember this day perfectly well. I was sitting with my friends in Polish city down towards the mountains in Katowice, and we were discussing the markets, right? And Bitcoin literally slashed 20%. And it was such an excellent example of a similar day, that happened yesterday and 2 days ago, right? And then people were panicking, and even though this was the bear market bottom, right? People were feeling that it's the end, that it's never going to go back up, right? Because, well, it was at 4,200 and now it's at 3,200. Now it's $3,000 for over again. 2 years later, 2 years later, Bitcoin reached $65,000 and $69,000, right? It makes you think. So, without further ado, let me tune in with a couple of good charts, right? The fact that Bitcoin does not trade in vacuum makes us appreciate the fact that the markets really like to perform in connection with the other markets, right? This is where we get help and aid from the technical toolkit and form and presence of Intermarket technical analysis. Before I roll, I just see some nice comment, and I really have to read it. I think it's Sebster. Sorry if I mispronounced that. It was a pleasure meeting you and BC. BC is a great guy. At the Blockchain Summit in London yesterday, partly due to my big liquidation. I consider giving up trading. So good to see you. Good to see you too, Sebster. I mean, really, I've been there. I've done that. This is what happens to the best of us. However, the point to note is definitely the one that for those who really want to persist over the long term, it's very important to keep the chin up, whenever there is a back day, whenever there is, a step back, whenever there is this backdrop that is taken as a couple of days, erasing the profits. This is the nature of this very risky environment. This is the nature of Bitcoin. This is the nature also that is going to accompany you as you grow and develop towards profitability, right? I had made I already know what I'm saying because I have literally made every single mistake that a trader can make, right? I blew up a couple of accounts before I really made it, you know. So my job right now, being a CMT, the only chartered market technician from my country, I'm a man on a mission to kind of like spread a little bit of this positive gospel about the right application and tools of technical analysis that can help you avoid, um, well, making the same mistakes, right? So, Sebs, you're in a very good place, and I appreciate you tuning in. Let's make sure that I drop some kind of like a good, valuable notes, insights to you. Let me load in again. I'll just make sure real quick on Twitter that everything is well and fine. Please excuse in the meantime my sore throat. You know, you may see a little bit of throat, not imperfection from my side. I'm recovering a little bit. So what we're looking at right now is the Dow Jones Industrials, right? Excuse me. That's this very chart. Dow Jones Industrials and Dow Jones Transportation both to the downside on today's on this weekend, basically for closing the traditional finance, right? What does that mean? What does it mean? Well, I should say what this does not mean to start with. It does not mean the fact that a candle or bar just drops below a critical average or below critical support. It does not represent itself the change in a trend, right? I mean, what you need to see from the trend change perspective is a continued long-term average change the curve, change the slope, change the angle, right? So the fact that we are looking at a little bit of a backdrop, below this average. I have no particular stake. I don't trade, industrial futures, so I'm not biased towards it. Um, what I'm saying is that the markets have turned in terms of the directions, that the markets have turned away from the bear market. We are not in a bear market. Bear market is defined as a declining primary trend, declining 200-day moving average. So if the market average 200-day trend, which is a very vast sample of data, and a mean average is a good representation of a good fair estimate of expected value, and it trends sideways, then it doesn't trend down. It's not a bear market. Surprise, right? So the fact that we just slightly drop below that, it doesn't change the fact that we are not in the bear market anymore, right? What it does, in fact, tell me is that there is, first of all, a lot of, or just a slight local technical weakness, right? Of course, breaking below this certain support or critical level is is considered bearish for a good reason, right? If you're a breakout trader, you would want to take a bet, a directional bet, when in the direction of the weakness, when there is when the weakness is represented by breaking critical support or threshold, right? However, in the stock markets, in a very noisy markets, in the especially in the cryptocurrencies, there's a lot of noise. So it often happens that a critical support is kind of like invaded, penetrated, and it just slips back right above it, right? And it curves down in a completely opposite direction. Same happens to the resistances. They are slightly kind of like tilted to the upside. It gives this false breakout and it hides back below, right? So those are very, very, I should say, popular common signals in a sideways environment. And that's exactly what we're looking at, right? This is a sideways environment. The market is not moving up locally over the course of the past couple of months. However, it's moving sideways, right? Sideways means intensified noise, more congestion of the noise, and more participation in the noise in this overall shift, right? We know that the markets love to bottom somewhere between August and October, and that's what they did in the last year, right? That's why they did significant sharp upturn above the long-term trend representing prior the bear market. So the market has turned, the market has overcome the bear market. That's what it tells you, right? The price action has overcome the bear market. And the fact that it's locally dipping, of course, it may have some substance when you look back 200 days from now. However, the fact that it's dipping, it's I don't know how much you would have to dip in order to curve down this massive long-term trend and really change this direction, really change this nature in the and the regime, right? So the message from that is that even though there is this drop, right? And again, I hold no particular stake in that. I'm not exposed to industrial stocks directly, so I'm not biased, right? I don't really care much which way it goes. Um, what it does tell me is that there's a local weakness in this overall trend change regime, and which is going to be later checked on and verified, March often becomes this month that is a little bit back and forth, that is not giving you strong predictive edge in either direction. So it's natural to see there's lots of back and forth price action in March, right? March is not a strong month as opposed to April and May historically. So it is not okay or fair to expect strong price action in March, right? If we go further and deeper, and do please let me know if it's clear so far. I'll be making some notes. Oh, Kelly, good to see you, Kelly, brother. Thank you so much. Um, what is really relevant by understanding also the S&P 500. Of course, it's not good that it's losing this $4,000 support region, this 3950. Also represented by the 200-day moving average. Of course, there's a little bit of down. However, what people forget is that this down day, just have a look here, right? What is given in is percentage change. We're talking about this 3500s all the way, pushing 20% in the course of what it was like 2 3 months maybe, right? And locally, right? And locally, we're talking about the push. Come on, give it in. And local, we're talking about the push, of 7%. So we moved 20% up and looking at 7% correction. And what many traders are doing is they are taking their recency bias, just looking at the most recent price action and completely ignoring, there you go, completely ignoring the price action that took them to the first place, took them in here to the first, in the first place, right? They fall for some sort of like a representativeness bias where they would extrapolate based on really small sample because they would have a look and compare similar pattern, from the past, and they see those bear market flashbacks, right? Because that's they all can remember. That's the fear. That's the loss aversion. That's the hindsight bias. Considering that, of course, this dump was expected. It was predictable. This is a trap. None of this price action is predictable. None of these things, you could ever tell with 100% guarantee. In fact, all of those biases, those tricks from our minds, this way of thinking, leads to something that we know as ego defensive, right? We as traders, as people, are naturally ego defensive. Our mind is going to play upon us many different tricks, just not to disturb or ruin our idealized pictures of us in our minds, right? So we would do everything but admit the fact that just maybe we were wrong, you know. And the problem is that many people they would take a small sample and take this one red day and take it opposed to the entire couple of months of price action, completely ignoring those long-term trend reversals, right? So you are looking at a significant push, and there's one down candle, and people all immediately forget about this entire move up, right? And this is just our mind playing trick on us, playing tricks on us because we are not really capable of really dealing very well with emotions as people by default, right? We can only master it or perfect it along with our experience as a trader. However, what it will do is, well, you would follow with some cognitive dissonance, right? Cognitive dissonance with kind of like, again, just clashes and doesn't match the previously held view, right? So what you do, what your mind does, it applies to everybody. However, you can work on that, right? Myself, I'm aware of those mistakes. I often fall from that myself. However, knowing of that, I can practice that, not to fall for it, right? So cognitive dissonance is basically the situation when this new view conflicts your old previous conservative view, right? It can also be associated with conservative bias. And what it will do is when it doesn't match and creates this mental discomfort, this stress of being wrong, it will discount this information. It will ignore this information, right? Often forcing you to hold on to losses, right? So I think that this is very tricky understanding or recognition to completely ignore, just based on a one or two red days for breaking below a support. Of course, it's important locally. However, you cannot just take one candle and completely forget about 6 months of price action taking you higher and taking you significantly higher, right? So still, if we go and have a look at the year-to-date performance for the S&P 500 sectors. And the reason for that, of course, is because Bitcoin is somewhere in the context of this, right? Bitcoin is not trading in vacuum. So applying this intermarket technical analysis trends understanding will help you understand and position Bitcoin somewhere around those frames. So let's have a look, right? Just having a look at the year-to-date performance, what it tells me, right? Let's put it 47 days. What it tells me is that still the leaders, like first of all the stocks are moving down, right? This is like a stocks as a whole just go down today, right? It's not necessarily that the most common situation. However, still the leadership comes from the risk on assets. And we're talking about the year-to-date basis, right? So again, we're not talking about this tiny little downtick. We're talking about this whole price action, which of course only then, when accounted for the larger context, makes sense, right? So knowing that still, excuse me, the 10% leadership coming from the risk on environment from very cyclical and aggressive stocks, such as communication services, technology, and consumer discretionary. Those three guys are leaders, right? Still, despite those upticks or despite those downticks, despite those local downfalls, right? And on the other side of the curve is exactly what we want to see in the bear market, in the bull market, sorry, excuse me, healthcare, utilities, as well as staples, right? even the energy even the energy. So what it tells me is that all the recessive environment, because those four stocks, energy, utilities, communication, sorry, the consumer staples, and healthcare, these were the best performance of the last year of the bear market. So them turning down, inverting, and being the worst performers, right, just tells me that this is exactly what we want to see in a bull market environment. So, believe it or not, despite the market has turned down, it does not invalidate the bullish setup. Right? Surprise. I know it's hard to believe because we would tend to apply just a tiny little small sample, just to one candle, just to one red day to invalidate all of the price action, all of the bullish, long lasting emerging trends. You know, people would really go and forget that Bitcoin a couple of years ago was trading at $1,000, right? So what does this one turning candle on the downside mean in the larger context, right? The answer is that it means nothing. It's completely irrelevant. It's considered noise. And you would have a lot of noise in the sideways environment, right? So the energy dropping, is exactly what you want to see, right? Because the energy prices, the high energy stocks prices, are exactly what takes away money from your pockets, right? Not letting you invest more money in the financial market. So now having a look at a little bit of this kind of like a double top pattern, or even, maybe some sort of like a, triangle, whatever, doesn't matter much. What it tells me is that there is this double top potential for the energy, right? All the thing that it needs to do is to confirm the breakdown, and it would confirm the breakdown technically, as long as it penetrates this neckline, right? This support around perfectly aligned with the 200-day moving average at around 81 or 80, right? People love those round numbers, so I would argue that even if it breaks below 81, it may still stop somewhere around 80 just to play the tricks on everyone. However, if you give and apply all those confirmation regions or confirmation signals, just as again, like a price distance travel or time spent below threshold or volume volatility, shit, Jesus, volume volatility increase, breadth increase or decrease, this could all facilitate this breakdown. So breaking down from the energy prices, which has slowed down a lot overall, um, could be potentially bullish for the other assets, for the risk assets, including cryptocurrencies, right? So please do let me know if it makes sense. Thank you so much for the kind comments. And of course, Kelly, you're right. So it found the support right at a 200-day moving average, golden retrace January bullish impulse, plus touching the CME cap, so much confluence support. Yeah, that's correct, right? Kelly's making very very valid point. What I would add to it, is that again putting those tiny local price action events, like today or like yesterday, framing that in longer context. I was talking about the pre-election years, right? So kick it back 84 years ago, 1939, 84 years ago. Since 1939, since the Second World War broke out, the pre-election years turned bearish only once. So only one instance of a losing pre-election year on the record since the World War II. That's the context I'm talking about. 84 years of data. I'm not talking about one fucking day on a red from Bitcoin, right? I mean, I hope that you really can tell and see, how grotesque that is, how completely irrelevant that is, right? So we take those 84 years of data, and that's what gives the bullish context, not the fact that Bitcoin goes up 5% or goes down 5%, right? So 84 years or one day is nothing compared with 84 years. On top of that, we're talking the January barometer, 83.3% accuracy ratio. Let me repeat. The January barometer, which says that as January goes, so goes the year, over 72 years since 1950, has 83.3% of chances to be accurate. 83.3% of chances that as January goes, so goes the year. Not based on the 5 candles, but based on 72 years. That's 2 or 3 times as long as I live. Right? So we got the confirmation for the bullish context out of 84 years, where only one case was bearish. We got the confirmation from January barometer, right? We know that the markets have curved up and bottomed out, rock bottomed, in October last year. We know that the next year's election and not a single sane political party would ever want to go into elections while having completely blown up the economy, because they would not get elected, right? So long story short, I would say that the significance of this one red day or 2 red days, or even if it's 5%, 10% reclaim, retracement, it means completely nothing when opposed 84 years of data. Does that make sense? Right? Tell me in the comments if it makes sense. Like, that just have to make sense. Then, of course, right, locally, like I say, there's a lot of unpredictability. Of course, there is a chance. Like the fact that it was a one losing year in 94 years, it tells me that there is still a chance that it was going to be a losing year. I recorded an excellent podcast with Mike, with Mike Singleton, a CFA, who's a chartered financial analyst, yesterday. And it's to be released, so soon you're going to be able to listen to it. And what he said is that there are some chances that he sees that this year may be the year that the seasonality doesn't play. However, and just completely objectively, if you have 83 to 84 odds that you win, you have 1 to 84 odds that you lose. Right? So it means that winning and betting on those bullish context perspective has historically been well more beneficial and profitable than betting against it. And looking at this trend change, so have a look. This is not a trend, right? This one bar right here is not a trend. This one trend candle bar is not a trend. This rejection bar is not a trend. This is a trend, right? This is a trend. Moving average is basically a trend, right? So while talking about trends and trend reversals, we're not talking about one bar, right? We're not talking about one candle or this breakaway gap. We don't give a damn about that. What we talk about when we talk about trends, we talk about the change in the angle of the long-term moving average. That's what it is. And what I am saying, you may like it or not, right? Many people would slice my throat for it. What I'm saying is that I may be blind. However, to me, it looks that this 200-day curve on the blue line has changed the angle. It stopped going down and started going flat. That's why I'm saying the trend has changed. The trend has changed and is not bearish anymore, right? I mean, I'm really trying to lay it as simply as possible, right? Because to me, it's obvious, right? However, it's very difficult at times to just slice through all of those biases that our mind puts on us, right? That make this very difficult for us to see through it, if you know what I'm saying, right? Of course, we would also have the real issue with recessive marks. We're talking about the deepest yield curve inversion between the 10 years and 2 years, you know, uh, since 1980s, since 1980, right? The yield curve inversion has not been this deep since 1980s. This is 50 years, almost like 80 or 40, whatever. Right? It doesn't matter. What I'm saying is it's not one day, it's not 5 days, it's 40 years, it's 4 decades of sample, right? So it's really a lot. It's very substantial. And of course, historically, every recession was preceded by a yield curve inversion. Here, 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 and so on and so forth. Of course, again, obviously doesn't guarantee anything for the future. There is no guarantee, just like I said, on the blockchain economy stage in London, there is no guarantee that the temperature is going to be above zero in the summer. However, if you're looking back at 200 years of data and summer, June always goes above 20 or 30 degrees, then how irresponsible would that be to bet that this year, just maybe, it completely ignores all the past thousands of years of data and it just snaps negative, right? And you would just freeze in June. Maybe you're right. Maybe they are right, right? However, the chances are so ridiculously small that it takes real courage or ignorance to long into it. Would you agree? If we go deeper, of course, a lot of those local headwinds, were amplified by the bearish testimonies, by the hawkish testimonies from Jay Powell, right? Um, Saying that they may find it viable, to actually just install federal rate hikes at a more aggressive pace, right? Admitting a little bit that they might have underacted. They also face lots of difficulties because they have to keep their job market mandate, and the price stability. So they're somewhere in between, managing two very different and very difficult categories. Because the price stability, of course, needs to be reverted because of very, very sharp and strong inflation, which is still coming off, right? It's still not out of the woods, while the job market wouldn't give up. It's very difficult to reduce the prices without ruining and damaging the job market. So the job market resilience is, of course, kind of like, it's just this wall keeping us away from recession. However, job market is also the last to fall right ahead of the recession, if you know what I mean. Right? So strong dollar pullback to the upside locally, right? Even if it goes higher to us like 108 or 110, whereas this technical support, resistance, if you will, whatever, the 50-day moving average continues to climb, which is significant. 50-month, again, 50-month, not 50-minute, 50-second. This is 50-month of data, right? It's going up, so it's significant, it's essential and substantial. It's okay. So locally, it doesn't necessarily mean, that just that we kind of like, again, invalidated the support, it stops being bullish or bearish. However, what I'm saying is that eventually they do not have much time. I mean, the politicians, the Fed, do not have much time to, just lean with their monetary policy a little more dovish or less hawkish eventually, because they would ruin their chances while heading to the elections, right? One way or another, if we go and take a look at what Bitcoin does, right? So what it does is, again, it pushes from 15,500 following the FTX collapse, putting in the bottom, pushes higher towards and above $25,000. Okay, 15,500 over 25,000. That's a lot. That's $10,000. Okay, that's 60%, 65%, and then it goes down 20%. So it moves up 60% and it goes down 20%. So does this invalidate this? Right? Please excuse. I'm really just putting a couple of different questions that just maybe are going to help you, uh, just put it in the right context, right? It's so easy to lose sight of the logic context and what really matters when you just have a look at 1 minute candles, which is what most of the degenerate traders do, right? So I remember, like I said, 2019. I exactly remember this day when we were sitting along with my friends, and chatting in Katowice. And I remember that. Hang on, this doesn't go this far in the past, right? So I remember that we were sitting and discussing, and Bitcoin was really tanking, from $4,000. I remember this day. It was this one, right? It was the end of February here, 4200s, and it was this exact day. This was this exact day, right, where Bitcoin went from 4200s towards like 37 or something, right? It doesn't even matter because it fucking blew up later, went like 5x or 6x in the next couple of months, right? And 2019 was also a pre-election year, right? So this is all just to put, again, just give you a little bit of fresh understanding that this local drop is completely, and I mean completely, irrelevant to what happened later, right? I really hope it makes sense. So same way, really the same way. Of course, the situation is different. We are talking about the war, the post-COVID, excuse me, post-COVID kind of like a situation. All the stuff of it's different. Naturally, it's different. However, the market mechanisms driven by supply and demand don't change. Our nature as the human beings being emotional do not change, right? The fact that the market is volatile does not change. So I think it's sane and completely fair to expect a volatile asset to go up 60% and then correct 20% or even 50%. And it would still not invalidate the bullishness of it. So back again, all right? I'm talking about the long-term trend change. I'm not saying something that is controversial. I'm not saying something that is my opinion. I'm literally reading and talking about what I see in the chart. Like, have a look. Hang on. Just see, right? This is the long-term trend of Bitcoin. This is the long-term trend of Bitcoin. It went down in 2022 until 2023, where it started going sideways, right? And it's even lifting up a little bit, right? The trend has changed. The trend is not bearish anymore. The long-term trend, which used to be bearish in the bear market, is not bearish anymore, right? I mean, it just puts a smile on my face, right? Because I've seen a couple of those already. I've seen a couple of bull markets and bear markets already. I've seen a couple of different, strange, crazy situations, and it's so simple. It's really this simple, legends, you know? So I hope that everybody who's watching and listening to that, if you ever struggle to ask yourself or to, to help yourself understand what the trend is, or is this for 50% move on the day up? Is this 50% move down on the day? Is this relevant to larger, well, 50% maybe, of course, a little bit off the record, right? Maybe off the fence. However, like 5%. 5%. Is this 5% move really significant? Will this drop immediately change the fact that the trend, long-term trend, has shifted on the past 200 days average? The answer is no. It won't change. It's irrelevant. It doesn't really matter much, right? So in fact, what I'm doing is what I'm going to do after the show is I'm going to add to my long-term bags in here, right? Those moving averages often work as nice support levels. Of course, it may slip slightly below. Of course, it may just go down, I don't know, even deeper, like 15, 16, I don't know. What I'm saying is that this long-term trend has changed. That's the important message to me. The trend is not bearish, right? So by default, everything that I would buy, I've got pretty decent estimate that I'm betting on something in the right direction, that I'm not betting against the trend, right? The trend is not bearish anymore. In fact, full disclosure, full transparency, a couple of weeks ago, for the context. Oh, by the way, I'll just give you that in a second. Oh, even by the way, too, I just changed my ape profile pictures. I got it really last year in June. Also, it served well as a balancing tool to my portfolio, right? As it was like 100, I think I paid like $100,000 for it or something, and it's basically in the same place right now. And it's perfect because I didn't lose 90% of just like the rest of the crypto did, right? So what I'm saying, excuse me. Um, so what I'm saying is, where do you get it? Pum 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 pum. Come on, give me this. Give me this tweet. Come on. Give me a second. Oh, geez, guys, I'm really trying to not to blow up the microphone with my coughing. Please excuse that. I'm really trying to recover and deliver some value, but I'm still probably sick a little bit. Sick with allergy, right? I don't know if you guys are allergic. However, I already bother every single year at the same time. I bother with allergy. Okay, so I got this tweet, right? So have a look, right? That's it. It was me kind of like, again, following the Barbicator Pro, which popped bullish, right? At one point in, what was that? 20, sorry, it was 15th, right? 14th, 15th of February. I bought in, right? Somewhere over here around $24,000. And I got stopped a couple of days later because that's what the trend signals do in the sideways, right? They just get stopped all the time. So, which is why I lose transparently, and I admitted like 50 to 50,000 times already. I lose 70% of the time about my trades, right? However, I allow to myself to lose 30% of 70% of the time and win only 30% of the time while waiting for those longer tails. Because then eventually those longer tails come up and I ride from 6900s all the way to 20, what is that, 22,800 or something, right? So while allowing myself to get chopped in the sideways, I'm waiting for those longer tails. So a couple of days ago, of course, what was it? 24th, right, of February, I got this bearish note from Barbicator Pro, which is my personal custom trading system that I follow and use for my trend trades, right? So I really went back to cash, right? I went back to cash on my position trade with around 700,000 something off. I lost about 30, 40,000, right? And ever since I remained in cash. So I do whatever the system does. So my opinion is completely irrelevant, right? I even wrote it. My position stopped with poor execution. I really executed that poorly. Could have done this better. A little bit of slippage. 2.5% on account loss versus 2% intended, right? Protection mode until the next signal triggers. The next signal didn't trigger. It hasn't triggered just yet, right? The next signal is still only going to be given to the upside as long as it breaks above 21.6 or 700, right? So until this happens, which aligns pretty well with those technical real levels regions of whatever 21,500 something, you know, unless it really plays out to the upside, I remain cash. So I don't really care. Like I said, I'm cashed on my medium term positions. I don't really care where it goes in terms of going lower or something, which is why I'm not necessarily biased right now. Like I said, I hold no particular stake in defending my own view. All that I'm saying is just maybe trying to give you a little bit of fresh understanding that just this local breakdown after 65% move, it does not change the fact that the long-term trend has shifted, right? So it's really this simple. It's really this simple, right? So with Ethereum, Ethereum is looking. Let's have a look actually, right? It's looking a little bit better. It put in the bottom earlier in the year in June, right, as opposed to November, and it's trading at around after peaking at 132%, 132% on last year after this bear market rally, right? And well, putting in okay, be more conservative. This year's high of 100%. Okay, let's be conservative. Just only tiny 100%. Just 2x. What is that? Right? After pulling 100% move up, and let's say even if we take the base of this one, if it takes off of the recent lows of November when Bitcoin put in the bottom, if it moves 65% move to the upside, and then it goes down off the peak of the maximum values 20%, which is putting it somewhere in the same place that Bitcoin is right now, right? Does this invalidate this long-term trend, which has started going down? Stopped going down and started going up. I don't know however we look at it. I gotta say that I'm not really seeing so that this local drop invalidates the fact that this line just goes up. Boom, right? So lots of those very simple terms and thoughts that really want to make sense. Want to let you know that when you think or when you forget and try to just go and slice through all of those irrelevant noise, all of those biases, that just attack us each and every single time from different angles just to defend our egos, which is natural. However, our job as traders is not to fall for this, right? So if you go and ignore or just learn, find your path to overcome this, you can clearly tell that those local drops are completely irrelevant, right? From the long-term perspective. And that's what I'm saying. And go and try and say this to the people and they're slicing your throat, right? Right in the middle of the street for it. Just because the market has turned. And a couple of days ago, they would literally hang, tied on your neck and then just kiss you in your fucking mouth. So it's crazy. It's crazy. Anyway, I'm just saying this. I typically keep those under 30 minutes. However, I just enjoy spending time with you for now, and my throat is playing tricks on me, so I hope you'll bear a couple of minutes. So all those again explanations for this crypto market crash explained just like the title says, of the Bitcoin price action analysis. This should give you a little bit of deeper understanding for why it doesn't make sense much to kind of like give up all your thoughts and all your beliefs, after 1 or 2 or 5 down days, right? Again, 4 years ago, Bitcoin dropped from exactly the same amount, 20%, from $4,000 to $3,000, or 4,200 to like to 3,500, whatever. It doesn't even matter, see? Because later, 2 years later, for the patience ones, for those who are patient, it pulled off like some crazy moves, like $65,000, right? $69,000. So what is this 20% drop in the spectrum of this significant move up? When you allow to yourself not to get disappointed, not to give up, not to quit after one down day, right? However, our ego defensive mechanism and system will try to defend this picture and not letting admit ourselves to mistakes, right? And like I said very openly, I'm going to be wrong about my trend trades 70% of the time. That's 7 out of 10. However, I can allow to myself to expose to such mental pain and discomfort, which I don't really feel much anymore. To be honest, I'm completely indifferent about that. And when you allow to yourself again to just bear all those losses, then I wait for this 30% of the time, those major wins that tend to persist. And this is the main reward that I'm waiting for, right? So my job is again to try to combat, understand those different biases, understand how much noise there is in my decision making, and try to follow through in that, right? Just follow my fucking system. That's as simple as that, right? That's I just feel so stupid and so silly, kind of like repeating this over and over again. However, it really is this simple, right? Let's have a look at this Bitcoin seasonality. This is an excellent charting tool, SeasonX. Again, I hold no particular stake with them. I'm not some sort of like an affiliate or something. I just enjoy using their tool for seasonality, right? So what it shows you is the 12-year average, detrended, right? This is trended and detrended, which means randomized data over the months of the year, showing you clearly how the year looks on the average in the 12-year look-back period. January is fairly meh. February is stronger on average. March is probably one of the worst performers in the year. August is negative. September is the worst, clearly. The best is April, and the best is October. Right? Same for the buying on a specific weekday. Mondays typically return better than buying on Sundays, right? Or buying on Wednesday is similar in effect to buying on Thursday. Clearly, Tuesdays and Fridays and Sundays are the worst days in a weekday, by weekday to buy. Same way that September and August are the worst months in a quarter three and the whole of the year to make any purchases, which is why most of the time I get chopped in sideways, and I'm just kind of like going back and forth and not over investing. However, if you have a look, right, then October typically is what it launches this bullish tendency, right, for the quarter four, which is why often quarter three is this worst kind of like a period for investment, and quarter four is the best, right? So now let's have a look. This is a 12-year history of Bitcoin. Let's have a look at how buying in March, what it does, right? So what it does, on average, 12-year data shows you that it's a fairly, excuse me, that it's a fairly down curve, right? Cumulative profit is positive. However, see that it's mostly skewed by this 2013 pump, right? So 2013 in 1 month in March brought 175% move in 1 month in March, right? 2013, 10 years ago. So this one outlier, if you kind of like just again ignore this, right? Let's I don't know, let's put in 10 years, right? Still, come on, it's still going to give it. Let's put in 2014, right? So obviously ignoring this major 2013 outlier, which was positive and skewed, kind of like just pulling because of strong skew to the upside, and just turning cumulative profit overall positive, you can tell that investing in March over the last 9 years, or anything excluding this major outlier, is giving you nothing but losses. So March is supposed to be bearish, right? So why are we surprised if it's bearish all over of the record, right? So the average return minus 8.39%, annualized return minus 64%, median return, okay, is minus 5% almost. Only 3 years, as opposed to 6 losing years were bullish, right? Only 3 bullish years as opposed to 6 bearish years. So the bearish are against you if you want to be bullish in March. However, let's see what happens in April. 1st of April through 1st of May. 10 years, let's give it a full data. Again, 2011 even pulled in fatter. 2011 brought, see, this, excuse me, 300, what is it, 330, 50% in 1 month. 350% move in 1 month, 3x, right, in 1 month. That's something. Cumulative return, obviously, over the years, is positive, bullish. It's still heavily skewed, so let's forget it. Let's put in 10 years, right? 2012, just to ignore this major outlier. So what it gives is that even if we ignore this biggest outlier on the record, the cumulative return still remains bullish curve. We're talking about the 4 losses as opposed to 7 gains. We're talking about 236% or almost 237% of annualized return and 10% over average return. I could live with that, okay? So see what happens, again, the full record, see what happens if we extend into this pattern of sell and May go away, right? So what happens after May ends? So 1st of April through 1st of June, sell and May go away, right? So what happens is, of course, again, strong seasonal pattern from almost 10x, 1000%, 10x in 2011. That's how volatile Bitcoin was at that time. So what is 1%, 5% down day when compared with 1000% return, right? By the way, I really hope that you can see the screen. Can you confirm that you can see the screen well? Please confirm in the chat for me. By the way, congratulations, guys. I mean, you're watching that, so it's pretty awesome. Like I said many times, you're the winners for the next bull run, right? Because so many people already gave up. So many people already kind of like, just chose to disbelieve, right? Because of one red day. And you are still here. You're still trying to learn. So well done to you. Congratulations, legends. I mean, you're the next winners, right? Just keep doing what you're doing. So finally, like I said, this 12-year pattern, right? Fuck it, even let's go 11. Let's ignore this major outlier. So even if we ignore this major outlier, right, it gives me still 200% annualized return, 20% average, and 20 even better, 28% median return, right? 8 gains, 3 losses. So the odds are fairly bullish if we could argue that, right? So it's still probably better to expect bearish March and bullish sell and May go away, which means a bullish ramp on April and further extension into May, right? So sell and May go away. So it would make sense to anticipate that after March, Bitcoin is rather supposed to follow the seasonal pattern just that the stocks do for so many years. And just, not forget that we're in the pre-election years, right? Not forget that the markets have turned, that the markets have shifted, the long-term trends have shifted, and that's it. Like that's the message that I wanted to leave you with. And before I go, because I've been, wasting your time for almost an hour already, I want you guys to have a look at the pinned tweet that I have on my account. So if you go under my account, crypto_BIRB, you would find this giveaway, right? So I'm throwing this $100 giveaway, and there is this pretty awesome hoodie, if you ask me, right? So what we're doing is that after many years, and it's real, after many years, we are bringing back our hoodies. However, it's limited to 100 pieces. So only 100 of pieces who may happen to be you are going to be able to get those hoodies, right? And there are a couple of different patterns of those, like black ones, white ones, with the branded hoodies, of course, the Bourbonets, right? When the moment they came in, last time we dropped them in 2019, people went mad over this, right? People went really mad over this, and it literally the moment it kind of like just appeared all over the internet, it was just gone. It was expired. It literally the supply was really just gone in a second. So this is all coming. First of all, you can win $100 and one of 100 of this limited hoodie, right? The only thing that you have to do is like, retweet, and comment hoodie now, just like hundreds and thousands of people did. So it takes 5 seconds, and you may give yourself a chance to win $100. And this extremely limited hoodie, only hundreds of this is going to be made, right? So like, retweet, and comment, and it's as simple as that. Go ahead and follow this. Just under my pinned tweet. I'm not going to move it or change it for now, because it does come along with our great release. And those hoodies, the rest of those hoodies, like I said, you can win one of 100. The rest of those hoodies that are going to be distributed will come with a special trading bundle that we're launching the next week. And it's going to be live only for 2 weeks. So if you stay tuned for the next release on March 15th, which is in roughly 5 days from now, next Wednesday, if you stay tuned and if you're around, we're going to throw in significant discounts to join the Burb Nest. We're going to give to everyone who really gives themselves a chance to sign up with this significant discount. They're going to get additionally, automatically, one of those limited hoodies, and naturally there are only going to be 100 of those trading bundles, and each and every single trading bundle will come with this limited hoodie of your choice, right? And each and every single premium trading bundle on discount with limited hoodie that you're going to get, and you're going to be able to pick your favorite pattern on the hoodie of excellent quality embroidering, excellent quality material. This is incredible. You're also going to get a special bonus, and there is 110% never lose guarantee, which means that if we don't deliver for 14 days, you're going to get some money back, right? And this is what's coming on March 15th, and it's only going to be live for 2 weeks. So if you appreciate this knowledge, just make sure you hit the subscribe button, smash the notification bells to stay tuned every time we put out new content. You can be sure that there are so many more videos coming. And if you want to take a part in the giveaway, win $100 or one of 100 limited hoodies, go ahead, like, retweet, and just say hoodie in the comment, and just maybe yours. And you do want to stay tuned. You don't want to miss your chance for this premium trading bundle coming next week with limited hoodies attached to every single order for a limited time with limited quantity with special bonus. It cannot get much better than this. That's all, folks, I've got for you today. Thank you for watching. You are the winners. Congratulations. God bless you. See you around, and bye-bye.